Hello, Oracles. Well, what can we expect from the stock market this week, the week of January 13th, 2025? This week, we're going to be getting the inflation data. We've got PPI data coming out, we've got CPI data coming out. Those are the two real big players that are coming out this week. Last week, we got the jobs report that came in, and it came in better than expected. But the market was kind of concerned about that because with the jobs report looking better, that kind of reinforces the position of the Fed to keep rates higher for longer and not do as many rate cuts. The market does not like that. So when we get the inflation data this week, are we going to be getting inflation data that's hotter than expected that further reinforces the fact that the Fed needs to keep rates higher? Or are we going to get better than expected inflation data and it's lower than expected? And the Fed says, you know what, maybe we can cut rates a little bit. We will see how it plays out this week. Again, I think the Fed is really looking forward towards what's going to happen when President Trump takes over and the tariffs that he's potentially going to put in place, because that I think is their bigger concern. And they're kind of waiting to see how that plays out. So inflation data this week might not weigh heavily on what the Fed's decision is going to be at the next FOMC meeting at the end of this month. But this is still going to be a point in time where we're going to take a look at this and say, all right, well, where are we at with inflation? Where are we going to be going forward in the future? And then the Fed is obviously going to take that into consideration. So today we'll go over the numbers and the expectations that we have for the inflation data this week. And then, of course, like I said, the next month is going to be kind of wild because between the inflation data coming out, we've got Trump's inauguration. We've got earnings starting off around the same time. End of the month, we've got the FOMC meeting. Next month is going to be a bit wild. We've already seen kind of a wild start to the year as it is right now. We'll just kind of see how it plays out for the rest of the month. And then from there, I think the dust will settle probably mid to end of February. And we can say, all right, well, where are we going from here? But today we're going to talk about the inflation data this week. All right, so on Tuesday, we're going to be getting the PPI data. The PPI month-over-month forecast is 0.4%, and last month we also got 0.4%. Now, this has been creeping up a little bit over the last couple of months, so this is kind of that concern of, is inflation kind of creeping its way back in? But don't forget, some of this could be due to the fact that we saw, the seasonality of what's going on with the holidays and all of that. So that could definitely factor into this as well. But we definitely don't want to see this trend continuing. And now the year-over-year expectations are 3%, where last month it was also 3%. That 3% was higher than the 2.6% that was forecast in December. So again, we do not want to see this continue trending higher, because this trending higher is giving the Fed more reason to keep rates higher for longer. And now the core month over month is at a 0.2% forecast, where last month was also 0.2%, falling in line with that forecast as well. So the core has been looking like it's pretty good. So the headline number is the only one we want to make sure that it is not creeping higher. And core year over year forecast is 3.2%, down from the 3.4% from last month. But that 3.4% from last month was higher than forecast at that 3.2%. So as far as producer prices go, this is still a concern. And now when we look at CPI data, which is coming out on Wednesday at 8:30 a.m. Eastern time, the forecast is 0.3%. Last month was also 0.3%, and that was in line with forecast. But as you can see by the data here, we have been creeping higher and higher over the last few months. Again, we want to make sure this does not keep on creeping higher. And the year-over-year forecast is 2.9%, where last month was 2.7%. Again, this is the forecast, could have seasonality factored into it. But again, looking at the data continuing to creep higher, we want to make sure this does not continue. Now, the Fed cutting rates kind of incentivizes some of the inflation to kind of come up. So now they're kind of at the point where, all right, between this, Trump's potential tariffs, we want to make sure that they stay in line. So again, all of these numbers and data kind of point to the fact that the Fed is going to be pausing and not cutting rates in January. And there's many people believing that the Fed's not going to be cutting rates again until June or July. And now core month over month is a forecast of 0.2%, which is down from the 0.3% of last month. So if core can continue coming down, that's good. And then we can potentially push through that seasonality and then get us back coming down again. We shall see how this plays out. And then core year over year, there is no forecast yet, but I have no doubt it's going to be that 3.3% that we have been seeing for the last few months. So again, we'll just kind of pay attention to the 3.3%, make sure we're staying around this level. And again, this level is not a bad level. It's on the higher end of what the Fed wants it to be. They basically want to be between 2 and 3%. So this is a little bit higher. They'd like to get this under 3%. So this is another thing that we've seen slowly creeping up over the last few months. But again, if they can keep it here and hold it and then keep it coming down, they'd like to get this under 3%. So again, inflation is really the piece that we're going to be paying attention to this week. There's not a lot of other macroeconomic things that are going on outside of any black swan events that are happening, which of course we've been having quite a wild start to the year, which we basically had a wild start to last year as well. So we'll kind of see how this is going to be playing out. Again, there's some people who are kind of thinking that this year might play out like 2022, and maybe we peaked already and we're going to start kind of dead cat bouncing and kind of sliding off on the way down. There's talks of some people thinking the Fed may end up having to raise rates this year instead of cutting rates. Again, a lot of that has to do with the inflation. They don't want inflation to get out of control. And if the jobs market is looking good, that gives the Fed the ability to be able to raise rates. Now, the Fed doesn't want to raise rates. This is not something that they want to do. But if they see inflation getting out of line, they are going to have to do that. Again, we remember what happened last time. Now, I don't think they're going to have to raise them as quickly, as much as we saw in 2022. But if the Fed does have to reverse course and raise rates, fully expect the market to panic and have at least a little bit of a crash coming into it with a massive sell-off because of rates going up. So just be prepared for that to happen just in case. Now, I am going to be putting out a video as well this week discussing the last few years and if I had purchased only Tesla alone and kept it the main piece of my portfolio versus what I did, which is switching over to buying real estate, looking for cash flow, buying dividends and things like that. So I'm going to be going over those two different options there and utilizing that, thinking about what we saw in 2022 and what could potentially play out here in 2025 as to why I chose the route that I went to go. Now, again, I don't think there's a wrong direction to go in this. Everybody's investing thesis is completely different. So it really all depends on what you want to do with your own portfolio. But again, I will discuss all of that in another video this week. So again, we are looking at the fear and greed index right now. We are at fear at 27, very close to that extreme fear level. So I don't know if maybe we get another couple of sell-off days ahead of CPI and then recover after that. I don't think we're going to stay in extreme fear for a long period of time. I do think we will end up coming out of this at least bouncing up a little bit, kind of recovering from the big sell-off that we've had in the last couple of days. So again, we've also had 3 weeks in a row of broken up trading weeks. We've had the market closing early on a Tuesday, closed on a Wednesday, and then this past week we were closed on Thursday to Jimmy Carter's funeral. So all of the different things going on, we now have the first full week of the year of trading that is going to be going on. So there's a lot of things that can be happening this week. A lot of investors may be coming back in. Maybe people had waited to kind of get back into the market this week, knowing what was going on. So just brace yourselves for some wild activity going on this week and for the next month. That's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.